Do. Let's see. Where is it? Hey, there we are. All right, we're live. We are live. What's up, guys? Hope everyone's doing well. We had a great live stream yesterday. We were going over, sort of did a live webinar where we went over entries and exits. And I'd like to do that again today because a lot of people seem to really like that. And it's always good to go over how to enter a trade, right? Especially for beginners, for intermediate, for advanced people. How to enter a trade is always the topic of conversation in any trading group. And why is that? Well, it's because there's so many ways to do it. And the idea is to come up with a very objective strategy to enter and exit your trade. And so that's why it's usually a topic of conversation. So what the approach that I like to take, and that I've developed with TrendCloud here, is a color coded system where you will see these entries here on the lower time frame, this little arrow that shows up on the low time frame here. And these arrows are representing candles that you can take the trade with. Okay, so let me just show you really quick here what that would look like. Let's blow this up nice and big. So you can see right here, this first candle here, okay, has a TrendCloud signal to it. Where would you enter the trade? Well, you have to wait for this candle to close. Okay, and when this candle closes, the arrow will be there. Now, the arrow forms as the candle is forming. So when this candle is sort of moving around, going up and down like this, the arrow is flashing, kind of giving you a heads up. Hey, this is probably going to be an entry candle. Okay. Where would you enter the trade on that? All right. So let me grab the little line tool here. And do you see the wick at the top of the candle there? What you're going to do is you're going to take the entry right at the top of that candle, okay? Right at the top of that candle there. Like one tick above, okay? And you can see that this candle gets you into the trade, right? Now, it's really easy to see, okay, well, where do we put the stop loss? Well, excuse me, you would put your stop loss right underneath the candle that formed the entry signal. All right. Do you get stopped out sometimes by doing that? Yeah. Yeah, you do. You'll never know what's going to happen, right? You'll never know what's going to happen. Like, look at this. Here we have an entry signal here. Got you into the trade. So we got into the trade right here. We put our stop loss right here. Oops, I'm sorry. We would put the entry there, and we would put our stop loss right underneath that candle, gets into the trade, and then slowly pulls all the way back, breaks through that that candle, and then makes this massive move to the upside, right? I hate to tell you this. There's no way of avoiding that. Okay, there's no way of avoiding it. So just get that out of your head right now. What you have to do is make sure that if this does fail, that you're only 1% of your total current account value. So this, from your entry to your stop loss, must be less than 1% of your total current account value. So if you get stopped out, hey, no problem. It's just a scrape on the knee. And then what do? You wait for the next signal and you get in. Now you can see this signal here also failed, didn't it? Right here. There and right there. right? It got you in and immediately stopped you out. And then this was the big winner. This was the big winner, and it's still going. Okay, so so how do we tighten this up? How do we tighten this system up so that we can avoid getting stopped out? And what we would do is look at multiple time frames, right? Now you can never avoid it 100%. That's what you got to get out of your head. You'll never avoid any signal, any stop out of any signal 100%. But what you can do, and this is what we do with TrendCloud, is you apply some filters. Okay, so what we do is we look at multiple time frames, right? Hey, good morning, Hitch. Good to see you, buddy. What we do is we look at a middle time frame and we look at a high time frame, and we make sure that these signals, okay, starting with this one right here, that we make sure that these signals match up. So does this signal here match up with momentum on the middle time frame? And in the training, if you go through the training, you can see right away that it does not, right? So why does this not match up with momentum on the middle time frame? Let's take a quick look. As you can see right here, on the CCI indicator, we are below negative 100, right? So in order to take an up signal, you've got to cross back up. Whoops. I thought I was on my other line tool. You have to cross back up above positive 100. Okay, simple rule. Very simple rule. And we don't have that yet. We have it. Where do we have it? We have it right here, right? Right here is where we have that signal. And in that moment in time, right here, we still don't have it. We don't have it until right here. And then look at the next candle. There's your entry signal that really had, no issue going to the upside. So do you see how you have to line that stuff up? Let's get rid of this line here. So that's how you line this stuff up, okay, guys? Now let's see, does this signal right here fits the scenario, right? Above that positive 100. So we have momentum on the middle time frame. Is momentum up on the high time frame? Yes, it is. You can see right here that this is green, and we are also green on the cycle indicator. Okay, so high time frame is cycling or impulsing up, and you always want to be in an impulse phase on your high time frame. Okay, I want to repeat that. You always want to be in an impulse phase on your high time frame when you're taking these signals. Why is that? What is an impulse phase, right? So take a look here on the high time frame. You have an uptrend. You've got an impulse up and a correction back into the trend cloud. An impulse up, a correction back into the trend cloud. An impulse up and a correction back into the trend cloud. And then impulse up. Okay, you always want to be in that impulse phase on your high time frame, and we get that here, right? So on this candle, when this candle forms, you can see that you've got momentum to the upside here, and that we are in an impulse phase. Okay. So, when you're taking your signals, and this signal here took place at what, 5 o'clock in the morning? I'm not up at 5 o'clock in the morning. So this signal here failed. We don't have momentum on the middle chart, and we don't have momentum on the high time frame. Okay. Let me show you on the high time frame here. Let me show you that momentum filter. Let's blow it up like a monster. Let's blow it up really big. See that right there? That momentum, or that momentum filter, is red. Okay. So, not the best situation. We always want to take trades. We always want to take trades under the most perfect conditions that we can find. And that's what we look for on the charts, right? We look for perfect situations. So I heard some instructor say one time, and I totally disagreed with them, but they said, oh, you should only focus on, on one instrument. And I think what he meant was, um, it's very difficult to look at multiple contracts, on your watch list all at the same time, right? If we look at everything here, and you're going from, from the S&P to the Nasdaq to gold, and you're trying to look at all this stuff during your trading hours, yeah, that's difficult. That's difficult. Which is why I built the zone scanner, right? And I have to update the zone scanner today, guys. So I apologize. But all of the new contracts are inside of the zone scanner. So I just look at the zone scanner before the market open, and I say, oh, okay, here are all of my contracts that I'm going to concentrate on. Let me find the best scenario in this box. Okay, here's the full watch list right here. And inside of the zone scanner, that is the cream of the crop, right? This is what I want to pay attention to and start to do my analysis on, right? So before market open, that's what I'm looking at. I'm looking at the zone scanner and I'm saying, oh, okay, so we've got crude oil that's in the box there, that's in our zone scanner. We've got the S&P, we've got the Canadian dollar. Let me look at these three contracts and see which one I like the best, and then that's the one that you take. So that is the best way. Hey, good morning, Kazi. Good to see you, buddy. That is the best way to approach looking at the market, right? Only choose the stocks or forex pairs, or in this case the futures contracts that have the best setup. Meaning, is everything in alignment? Do I have everything in alignment here? And you can look at that. You can look at that low time frame, and you can say, oh, okay, let's see here. The S&P, we got some signals here. This one took place at 4 o'clock in the morning. This one took place at 5 o'clock in the morning. Now, right here at 7 a.m., that's when, the strongest moves start. And you could say, well, we've got another signal here. Okay. Is this lined up? Let's see here. Well, not quite yet, right? We don't have that. We don't have that momentum yet. We've got the trend, and we're cycling up, and we've got the momentum up on the filter. Trend is this is pretty good. We've only got one little piece of the puzzle missing. And remember, when I say, as long as there's just one piece of the puzzle missing, you're fine. Out of all of this that you're looking at, if there's just one piece missing, you're fine. Two pieces, you got to back off. So let's say you want the perfect situation and you're like, no, I got to wait. Right there, right on this candle, before you get the signal, look what you have now. You've got a perfect scenario. Uptrend, uptrend, uptrend. Momentum is up, impulsing up. This is the perfect scenario, okay? This is the perfect scenario. Now, you've got to see that. You've got to see that. Um, and you've got to see that rather quickly, right? So that's why the zone scanner is so important, because it's going to bring up it's going to bring up all the contracts that you should be concentrating on. But pre-market, you can go through this and you can say, hey, you know what, this is lining up really well. This S&P is lining up really well. I'm just missing the CCI indicator reading. I'm just missing one little piece of the puzzle. What's this, Hitch? Piper Sandler upgrades. Oh, wow. Overweight from neutral, raises price. Wow. 31. Wow. Imagine getting in on that at 15 and riding that all the way up to 31. We'll take a look at it. Right, MACD, impulse indicator, 2 to 3 histogram spot. Yeah, absolutely. Yeah, absolutely, Hitch. Yeah, that's right. The when you're looking at that MACD filter, right? And you have here, we've got these green the green histogram. The very first when you see the very first flash of red, right? This has to close, right? This has to close before you could be sure that momentum has shifted. So intraday, like as this thing is going on, this candle or this histogram spike might be flashing green and red. When it closes fully and you go to the next bar on the histogram here, and you see that this is red, now you can say, okay, momentum is down. All right. And sometimes that gets a little frustrating, right? But hey, it's a clear picture of what's going on right now. And you need to take advantage of that. So put up with the little bit of uncertainty, anxiety, right? Put up with the uncertainty, anxiety of, oh, it's not ready yet, or oh, what if I get stopped out? The system works. The system works. So in the long run, you're making money. In between those flips of the coin, right? We never know the sequence of heads and tails. We never know the sequence of wins and losses. We never know. All right. So trade an objective style. And that's what we've got here. So lining everything up with this is going to lead to profits. Okay. So you can see here that finally, when we get to this candle, we do get a signal. And so where would your entry go? Here's the candle. Entry would go right here, right at the top. This candle gets you in, and the stop loss goes right there. That's your best risk to reward right there. Sometimes you get a signal inside of like a consolidation, and we have one of those, I believe, back here. Let's see. Like here, you can see there's a lot of consolidation here, right? And this ends up failing. And then down here, you've got this very long candle, right? This is a tough one, right, guys? This is a toughie, because this candle right here formed, and your entry would have to go like this. Your entry would have to go there, and your stop loss would have to go there. That might be too expensive. So then what do you do? Well, maybe you can take the pullback into this area, and it never comes back. So there are some frustrating things that happen to us sometimes, and there's just nothing you can do about it. So don't rack your brains about, oh, how could I formulate, it is what it is. It is what it is. You can take, you can take the entry, and then you would just have to take a money stop. And in this case, it worked, right? So you would go down, let's say this is a $20,000 account. You would go down to $200 and you would take the full the 1% stop out and risk it, right? It's still a risk. You just take the 200. So this would be a money stop. You would take the full $200 stop out, and there you go. Okay, so that works. We don't get a signal until here again, right? And if we go and we look at our, if we look at, what time is it here? Well, it's 1:30 in the morning, right? So we wouldn't really be, we wouldn't be looking at this unless you're a zombie, right? And you're up late at night. Let's just say, for the sake of argument, that it's like 9 a.m. or something, 9:30 or whatever. Take a look at this. Where would your entry be on this signal, right? It'd be right here. Okay. And your stop out would be right here, right underneath it. And boy, that's what a great risk to reward, right? Talk about asymmetrical leverage. So there you go. So let's take a look. Does this line up? Trend is up, but it's extended. We don't like that, do we? This is an extended trend on the 1 hour. We usually get really deep pullbacks. Okay, that's only one piece of the puzzle missing. We've got momentum, right? Nice spike up. We've got momentum. We've got momentum on this chart. We're cycling up, and we're in an uptrend. So there's just one piece of the puzzle that's missing. So we might have taken this trade, and we're assuming it's like anywhere from 7 a.m. to 11 a.m., right? Because that's the sweet spot. Where this is just for sake of argument here, for education purposes only. So what happens in this scenario? Price never hits your entry. Price never hits your entry. See that? That will happen sometimes. So do you see how here's the signal, here's your entry, stop loss, what happens? Inside bar, and then a close below. Once that happens, once you get a close below your signal candle and there's no entry, this is out. This is voided, right? Then we get another signal here. This one, your entry would go there, and your stop loss would go right there. And what happens here? The next signal, no, it does not hit, right? This is the candle that hits the entry. This is an inside bar, this doji. But look what happens. It breaks down right below that candle. That would void that out as well. All right. So when you're waiting for this, all right, and again, this is 3 o'clock in the morning. We're not going to be looking at this. But when you're waiting for this, and let's say everything lines up on the chart, everything lines up, you're waiting for this, and you have your entry here. You get in, right? You get into this entry, or you're waiting for this entry, and the next candle breaks below your entry candle. That's it. You have to start over again. And then you would go to the next signal, okay, and make sure that signal is lined up, and you would just go that way. So there are some rules, and we go over the rules in the master class, but it's a system that works. What's going on? Making a nice move. Oh man, okay. Let's go micro crude. All right. Let's see here. Yep, breaking out. What are we on? This is the 15-minute chart. Let's go over micro crude here. Okay, well, hey, yeah, we're just starting to break above that positive 100. So this would be really nice on the pullback, right? This would be a nice move on the pullback. We're breaking above the 100 simple moving average. We're in an uptrend, cycling up, which means we're impulsing up. Momentum is green. Momentum is good. We are good to go on crude oil for a pullback, right? No signal, right? We're not going to take these signals to the downside, right? Because we're in an upward move. So right here, let's go to our 5-minute chart. And there's the signal right there. Okay, so right here at 8:45, we've got a nice signal here. Right there. There's your entry, there's your exit, and we get this big breakout. Okay, so maybe we missed that. Let's go to the opening range breakout. Let me recalculate the chart here, guys. Okay, opening range breakout. We want to make sure we're on the 5-minute only. All right, let's take a look. Oh my goodness. That's a really so it looks like TrendCloud signal got us in. Now we've also just formed here. Not really a formation here. Well, okay, so we can say that this rally base, or this is a sort of a, I would look at this candle. This is a very bearish candle right here, this candle. So I would say drop base. No, you can't even say that because it closed here below this candle. Rally, base, rally, you'd have to call it. And it would look like, yeah, kind of, I would draw it like that. Okay, so if we get the pullback, we can get this pullback pretty deep into here. This is just a rally, and a rally. Rally, this is a basing candle. This may pull back kind of shallow. Might pull back kind of shallow. Maybe we get a signal. We might get a signal. See, even the signal will take place down in here, because in order for the candle to have a signal, it has to pull back into the trend cloud. 5-minute, yeah. So you were looking at that weird looking formation too, right? So so right here, here's the signal candle. And what do we got here as well? We've got some kind of support level here, this orange line. Oh, wow, that's really far out. Previous week's high. Okay, that's the previous week's high there. Let's go to the 15-minute chart. Yeah, look at that, Kazi. I would definitely look at that on the 15-minute chart, right? This is a drop base rally on the 15-minute chart. That kind of makes more sense. And, your stop loss would go right here. Stop loss. Oh, I have it here already. Right? How about right there? In this area here. This way we're below the previous day's close. We're below the previous month. What is that? Previous week's high. We're below that. So I would put that, what's that, 72.67. 72.67. And try to tighten up that entry. Totally doable, right? Even if you wanted to take the full length of this thing, pretty inexpensive. Pretty inexpensive, right? There's your 5 contracts, $150 risk. And you can even tighten that up a bit, you know. Now let's look at it on the 5-minute chart with the opening range in there. And yeah, so you're at the bottom part of the opening range. So yeah, whether you're here, that's what it should look. That's what I'm seeing. That's what I'm seeing, Kazi. Yeah. Yep. And here we go, and it's coming back. Holy smokes. What's the chatter? Any chatter on crude oil? 27 minutes ago, micro crude. What did I do here? No, I want news. Here's ideas. We want news. Financials, tech, forecast not available. Technicals. Interesting. Neutral to a sell. Look at that. Moving averages are saying interesting. Huh. We're trying to buy this sucker. That's interesting. Ah, here we go. Okay, 2 minutes ago, sector update. United States Oil Fund, nearly 0.4% higher. And the United States Natural Gas Fund was down. Equinor said it signed a long-term agreement to supply Germany's state-owned energy. ExxonMobil, Esso, Netherlands intends to construct a pilot plant. This is all nonsense. I don't know. I mean, I don't know. I don't know what any of that means. Do you? Do you guys have any idea what any of that meant? I have no idea. I know what this means, though. Oh, that's daily. I gotcha. I don't know what that means. See, none of that makes sense. This makes sense to me. Are we going to get in on this? Man, I hope so. You never know. Confirmation entry candles. What do we got? Anything? Even that confirmation entry candle here on the upswing. Yeah, we got a confirmation entry candle even right at 8:05. Another signal at 8:45. I don't know, what more do you want, right? Sorry, TrendCloud. I wasn't looking at this. That's the thing when you get into like doing a lesson and then something takes place. So yeah, it's always good to have other eyeballs on this thing. So there we go. There we go. Man, it's just pulling back, tapping that run up 7% already. Yeah. Yep. Oh. Ay, ay, ay. Yep. Go back to the 15-minute. I'll watch it on the 15-minute chart. Forming a rally-based rally here on the 15-minute. We might, right, we're coming into, right, it might hit something up here, right? Might hit some supply here and give us a nice move, back. But we are in an uptrend everywhere with momentum at our backs, right? Got momentum at our backs. So maybe this is the point where it pulls back to recalculate. Let's see. Where's our Globex? Here's our Globex, 37%. Yeah, this has got a lot. This has got a lot of room to run. Breaking out of the opening range as well as the Globex coming up into this supply zone on the middle time frame here. And let's see. Let's see if we can get this, right? Maybe we get something like that. We'll leave that on there and we'll see just how accurate our quick little drawing is. Gold and natural gas. Natural gas. Let's recalculate that chart. Okay. Now let's put everything on there. Let's do it all. Sure. 5-minute. Okay. Natural gas. Bop, bop, bop. When extended, see that? When natural gas, when extended, we just crossed below the 50. Yeah, this is setting up for a really nice, oh, look at that bear trap or bull trap. Look at that bull trap right there. Candle spiked up. Nice. Okay. Yeah, we've got all the signals to the downside here. Let's see. Can we take the breakout? Can we take the breakout of 210? It's a little. If we put it here, you know what we could do? I don't know if it's going to do it again, but we could take if this retests this area here, we could retake. We could do something like this. Wow! And if we do this, we can actually take 2 contracts here. Possible. A lot of momentum to the downside on natural gas. If this if it starts to break below this candle here, you would have to take a money stop. You'd have to take a money stop, but we don't really like that procedure, But when you see a confirmation entry candle like this to the upside, but all the forces are down, I don't have a problem taking the trade 1 tick below this. Oops. sell order right there. And then your stop loss, it would have to go and really take off. Now we're at now we're at it's either one or the other, because that's a $200 risk, right? So if this thing breaks one tick below here, we could get into the downside. Hopefully it pulls back up and gets us in there. All right, so we're set up for that. Micro gold. We need the 15-minute. 15-minute chart. Yeah, micro gold broke out to the upside, impulsing up. Oh, wow. Yeah, look at that. Oh, that's beautiful right there. We really got that signal. That's at 6 o'clock, 6 a.m., right? 6 o'clock in the morning. We got that signal, got some confirmation entry, right? Here's a confirmation entry candle, right? So that could be an entry. There's your stop loss. Now we've got this rally base rally. Looking good. This is looking good for a pullback, right? This is looking really good for a pullback. Rally base rally. I would say that right there. I would say that right there. Entry. Stop loss. Right? Drop base rally. That on the micro, we've got yeah, that's plenty, man. 5 contracts, hell yeah. Got 5 contracts to work with. You can take the full length of this dip, right? This drop base rally here into this rally base rally. There we go. Hey, Krishnan, good morning. All right. We're going over entries. Oh gosh, let me pull up the live stream on. Okay, there we go. Yeah, wow. Gold is taking off. Gold is taking off. Just broke through structure here. I mean, if it comes back to this area, man, we've got a great chance. Got a great chance. Oh, nice, Kazi. 2-1. Oh, good. Beautiful. Yep. So if you only have one contract, then you did it. You did it, right? Really taking off here. In gold, I've seen this happen a lot in gold. I'm sure you guys have seen this. Gold will take off like a rocket ship and then come all the way back down and a little lower, right? On these massive moves like this. So we got a good chance. But everything you can see, momentum is up, trend is up. Momentum is up, trend is up, cycling up, right? High time frame curve zone on gold. How would we draw this? I would draw it like that. I would draw it just like that. Take the tops, right? Make that red. So, man, yeah, if you're in this, if you have any more contracts, Yeah, there you go. There's your, and look at that. Yeah, that is definitely a rally-based rally that broke through structure on the middle time frame there on gold. Yeah, for sure. Interesting. Pulls back. Does it pull back and just sort of hit this? Yeah, we never know. TrendCloud is right in here. Right, that 15-minute trend cloud. Man, that is just taken off like crazy. Oh, wow, nice. 5-minute trend cloud signal on gold. Kazi took the 5-minute trend cloud. Oh, boom. Oh, wow, look at that. Beautiful. I tell you, man, these signals are so powerful. When you line that up, when you line that up with there we go. Yeah, so it's extended. So the 5-minute chart is extended now, right? So let's see, 7:30. I don't know if you took this one, Kazi, or if you took one of these. Um, either way, it worked out and hit your 2-to-1. But look at how we're extended now on that 5-minute. So what does this want to do? Eventually, right? At some point, this wants to break below this line, and it's real close. It's real close to our stop loss, right? So this might be a deep pullback at some point. At some point, it might. We want it to do this. Yeah, something like this here. We want it to do something like that, right? Well, we'll see. We'll see if we get it. We'll see if we get it. Oh yeah, yeah. Style and click the lines. Yeah, that's right. Yeah, if you go if you go under style, and then you've got you've got the lines on here. I think I have it off, but lines. There you go. And then there's your it gives you this the swing, right? It gives you the swing high and the swing low, and you can see it right here. There's your swing low, green line. There's your swing high, red line. As if to say demand and supply. Yep. So, yeah, buddy, look at, good Lord. Gold taken off. Blast off. Nice trend cloud signals to the upside. Holy moly, look at this thing go. Gold is just taking off to the upside here. This would be a great scenario for the retest of that opening range. Uh, 4-to-1, nice, Kazi. Second contract, nice. Okay, I was going to ask to see if you have multiple contracts on there. Yep, 2-to-1, take off one. 4-to-1, take off another. Beautiful, man. Gosh, I wish I was in that. Good job, Kazi. Beautiful. Yeah. Oh, we've got a resistance level up here as well, don't we? Where did it go? 45-minute. Here we are. What is that line there? That must be the previous week's open right there. I can't seem to get a fix on it. That's weird. Oh, there we go. No. Previous month's close. It was recalculating right there. Previous month's close, previous month's high, right there. Previous month's high, previous month's close. Heading for that previous month's close. Look at that, guys. Right inside. Imagine if it rips through all of that. Holy cow. I don't see it. I don't see it ripping through all of this. It's got to have some kind of a pullback here. And we are getting, here's your high. We do have a lower high. So maybe it's going to form another lower high here. Not sure, but that's what we're looking at. That is what we're looking at. Go back to the 15-minute. Ray, what's up? Oh, we are looking at gold here, Ray. We're looking at gold blasting off to the upside here. The euro. Let's get over to the euro. Euro. Okay, euro. Let's get rid of our Globex trap. We don't use any of that stuff. Recalculate. Okay. Yeah, euro, uptrend, uptrend, uptrend. All three time frames are up, right? TrendCloud on each time frame is up. Momentum. It's above positive 200. Wow. Cycling up, which means we're impulsing up, and momentum is up on the high time frame, that momentum filter. So we've got everything here telling us, and there you go again, 7 a.m. This is 7 a.m. Eastern that I'm talking about here, right? 7 a.m. Eastern, and we've got all these signals here telling us, hey, man, jump in on that. And we're heading towards that. We are heading towards the curve on that high time frame there. And you can draw it like that. Okay. Let's switch time off. And there we go. Kind of looking like the gold situation, isn't it? Everything kind of looking like gold. Kind of looking like gold here. So we're getting real high on the curve here. You can see 5 waves, 6 waves, candles turn blue, right, Krishnan? Candles turning blue. What does it want to do? Wants to break below that 50 simple to recalculate. So what did it do here? It pulled down 1, 2, went sideways, and continued to move up. Okay, that's one scenario. So in this particular case, now listen to this, guys. When you see that the trend becomes extended on the middle time frame, right? Because you have a different outlook. If the trend is extended on the middle time frame as opposed to the high time frame, you've got a little bit different of a strategy going on, right? Think about that. If we're on the middle time frame and the trend becomes extended, right? It's going to want to pull back below the 50 simple, right? And recalculate and do something. At the same time, if you look at the high time frame and you're in an uptrend, and in this case, we're early in the uptrend, right? We're only at the second wave of the uptrend, but the middle time frame is extended. we have to assume that we're going to make a deep pullback and then continue the high time frame uptrend, right? But if we're on the high time frame, and right here, and the high time frame becomes extended, now the strategy changes, doesn't it? Because it's more about these lower time frames going into complete trend reversal here. And in this scenario, okay, if you guys take a look at this, if put TrendCloud on your chart, go back to November 28th. Okay, November 28th, you'll see high time frame, extended trend. Middle time frame, extended trend. Okay, so Krishnan, when we were talking about that, take a look at the euro. Okay, take a look at the euro 4-hour chart, 1-hour chart, and look how both have become extended. All right, and so when the high time frame is extended, we're looking for the lower time frames to achieve some kind of trend reversal, complete trend reversal. And that is what we get here. Okay. So when the high time frame becomes extended, you're looking for trend reversals. Okay. You just have to put your mind, you've got to get your mind set for trend reversal, right? Maybe it might not work, a couple of you might get stopped out a couple of times, but the trend reversal is coming because the trend is extended on the highest time frame. Okay. But if you're in an uptrend on the high time frame and you're early in the uptrend, but yet you get a extended trend on your middle time frame, the context of this is still up. This is temporary. So when you're extended on the middle time frame, you've got to think deep pullback. If you're extended on the high time frame, you've got to think trend reversal. Does that make sense, guys? High time frame, extended trend, trend reversal. Trend reversal. Middle time frame, extended trend, deep pullback. Middle time frame, extended trend, deep pullback. Okay, and that's what we've got here. So we've got a middle time frame, extended trend with a high time frame uptrend, right? This is telling us just look for that deep pullback. And what does it do? Breaks below the 50, recalculates, and then we kind of go sideways, right? We go sideways and then and then the breakout, right? This was a deep pullback on your middle time frame in the context of a high time frame uptrend. All right, so that is really important to understand the concept, because that's going to set up your strategy. Remember, TrendCloud is a price action mapping system. You've got to take the context of the price action and then apply that to your strategy, right? That's what's going to make you the most money, okay? When I first get in, maybe $10 and C4 trend. Yep. Whatever you're most comfortable with. Hitch, 5 a.m. Pacific time. Oh, yeah. Yep, exactly, Kazi. Yep. Okay, let's see here. So that's a really important concept. Okay, so to apply that to your trading strategy. Okay, how is the Japanese yen doing? Oh my God, there it is. What did I tell you guys? What did I tell you guys? The Japanese yen is a beautiful thing to short because when you start to see the we had that uptrend going on for a while, right? These upward moves here, and then there's your wonky looking candle, right? That it always gives us some kind of weird spike candle and then continues the move down, right? Like if we take a look at this, let's go out to the daily. This is a beautiful thing to short, guys. The Japanese yen is a beautiful thing to focus on, concentrate on for shorting. And what do we have here? Yeah, so we've got this, and this is the daily chart. We've got this this uptrend, right? And daily chart is showing some strength, right? It is showing strength here. And on those lower time frames, you end up seeing these crazy candles. When you see a crazy candle like this, it usually is followed up with a really deep pullback. So 4-hour chart is starting to break down. Candles are starting to turn yellow, and we're starting to transition, right? Yellow candles, in case you guys don't know, if anyone new is here, the yellow candles, those are our transition candles, right? And this is where we transition between the uptrend and the downtrend, okay? That is where we transition. Yes, that's right. Yes, that's right. That's right, Hitch. So yeah, so in this case, right, we've got a 1-hour downtrend that's just starting to become extended. So where does this pullback want to take place? We can see we've got mixed signals here, right? We've got a downtrend, we've got an uptrend. We're cycling up. Momentum is up on the high time frame, but yet momentum is down on the middle time frame. We got a bunch of mixed signals. We're not ready to do anything with this yet, but we've got this downtrend. Candles have become extended, so we are looking. We are looking for either a deep pullback, right, into this rally-based drop right here, clear as day. Right? Rally-based drop. This candle went up, hit those sellers, and boom, got knocked right back down. So this is not a fresh zone, but we are extended, and it does want to do something with it. So this might be, we might get another shot at this if it pulls back up into here to the downside. But we've got to have momentum on our side, right? It's got to do a little bit more, right? It's got to do a little bit more. Maybe it does, something like this, and then at this point, right here, now we can start shorting this thing, right? Natural gas. Okay, let's get over to natural gas. Looks like natural gas triggered. What were we looking for? Oh, okay. So it didn't pull back all the way. So let's take this off. Okay. So there we go. So we're taking we're taking a momentum trade here, But take a look, guys. We are extended, right? We're extended on that 15-minute chart. Oh my goodness. So we're almost at our 1-to-1. Maybe we can take, let's see, we're selling, so we want to take one off. Take one off. We're at 1-to-1. Let's go a little further there. Take off one contract there. Let's see. There's our natural gas. See, we're extended here, so that puts us in a sticky situation, doesn't it? That puts us in a little bit of a sticky situation. So it might just end up reversing completely and coming back up in here. But that's the chance you've got to take. We're coming down into this level of demand right down here. So that looks like a good spot. So we'll see if we can get this. But this is a money stop here. This is a money stop, and we're taking the actual breakout. Let's see. Let's get over to the 5-minute chart and put up the opening range on here. We're using the 5-minute opening range, and this is what we are looking at here, right? So we're taking that breakdown. If this decides to turn back around, we'll get another shot at it, right? So we can do something like this. Hopefully we make it, right? We don't want any kind of a stop out. Let's see if we can get this thing. All right, we're in a risk-free trade now, right? We're in a risk-free trade. Let's see if we can take off one contract. There we go. All right, so we took one contract off. We made a little bit of money. And what if? Yeah, we don't want to do that. We want to keep the profit. So we can follow this down. We can follow this down because this here. That is a demand zone, right? So that is a demand zone. And looks like we're going to make that target. But we wanted to take this trade, right? Because we wanted to take this trade because we are everything was lined up, right? When everything is lined up for you, it really becomes a very powerful system for making money, right? Because we've got momentum and trend on our side across multiple time frames, and that's what it's all about. That's what it's all about. It's about lining up momentum and trend across multiple time frames, right? And you want to take these beautiful move. So you want to take these targets because now we're in this demand zone, and now we might get the pullback, the deep pullback into our zone, right? Right, because this is still fresh, and we are just going to the downside here, right? So we're in this middle time frame curve zone, middle time frame demand zone here, and if it breaks through this, great. Let's look for another setup. How is our gold trade doing? We've got a thing on gold here as well. Oh my goodness, Kazi, what the hell? Well, Kazi got in on this. He took the TrendCloud signal, bam, and there you go. And so it did hit the signal. I'm gonna take this off right now because we're going to be getting late in the day. But so if you got in on the TrendCloud signal here, you made out like a bandit. Glad that natural gas, you were able to see that natural gas trade, and we're still going, right? So, having everything on your chart here, and making sure that you go through you go through your setup process, before the market open, and then you're ready. So you're ready to take trades before the market opens. You're looking at everything and you're saying, okay, trend, momentum, everything is lined up. We were so confident to take this natural gas trade. We were so confident to take it. Why? Because we had everything lined up. We had trend and momentum on our side, and we were like, oh my gosh, yeah, you got to take this. Look, everything's lined up. Everything's lined up for you. And, this is expensive stuff. Natural gas is very expensive. So when you see everything lined up, you go for it, right? You really have to go for it on every single trade. We had a really nice risk to reward, and we decided to take the actual breakout of this using our confirmation entry candles, right? So we took the trade right here. We saw that we had a confirmation entry signal right here. And what we did was we took the trade right here. Okay. So this actually pulled back and hit our supply zone, right? It came up, just nicked it, and then nice reversal. So we said, okay, we're going to let it do whatever it's going to do up in here. And when it breaks below this, we're going to take the entry. And that's what we did. And we took that and we made we made 2-to-1 on that right there, right? We took a 1-to-1 and then we took the 2-to-1. Excellent. Great. Nice little trade. Now this is still going, but again, we're getting late in the day, and we don't want to give back any of that money, right? We don't want to give back any of that money. So, could you keep this on? Yeah, you could keep this on, and you could get out of this trade when you see the 5-minute TrendCloud reverse. Okay, you can take that chance and let this thing run the full gamut, until it starts to become extended. Or you can get out of this when the candles start to turn blue, if they start to turn blue, right? That's why you want to do both, right? You want to take some targets, and then when you have that one contract left, you can let that run, okay? For the purpose of what we're doing here, it's important that you guys see targets being taken, right? So there's more of a lesson to be shown by taking targets, right? Because this might last for 3 days, and then we can't have a 3-day long, live stream, So so taking targets and seeing profits being made, that's good for you guys. That's good for you guys to see. But the most important thing is that we only risked 1%. It was actually less than 1%, right? So we only risked 1% of our total current account value. We made some money. We took the targets, on to the next trade, right? So now this pullback taking place might retest the opening range, right? Might retest the opening range. So if you wanted to get back in on this, what I would do is let's grab Fibonacci, grab that Fibonacci retracement tool, and we're going to go from right here, this swing high, grab the magnet, make sure I like it perfect. So swing high to swing low. And look at that. We've got a 618 retracement level right here at the bottom of the opening range. And we've got this right here, which would give us a really nice risk to reward. What's that going to cost us? There you go. So there's $150 risk right there. If this takes place today, that would be another move, right? This pulls back, hits that 786. Maybe it wants the 886, but we are protected by this stop loss and this TrendCloud, right? Look at what we have here as well. Drop, base, drop. Okay. Which one is it going to hit? Which one is natural gas going to hit? Is it going to pull all the way back into this drop, base, drop? Which this is not fresh, because look, we pulled back into that already, right? So you'll never know, right? You'll never know. Maybe it wants to come back and hit this new drop, base, drop that we originally said we wanted, right? That's right where our stop loss is. So we made money today. Do we want to risk the profit? It's 1016. Do we want to risk the profit that we made today? So on the pullback, this is all legitimate. You just have to say to yourself, well, if it does pull back, I've got all of this to worry about. And if we put it right here, now we're at 108. We're still under 1%. We're still under 1%. Does that look like a better risk? There's your 1% of the $20,000 account, but you have to take the trade up here. So maybe you want the 886. How about the pullback to the 886, where we're protected by this drop, base, drop, and we are above structure? That's the thought process you have to go through. Okay, that's the thought. If you're going to take a risk, that's the thought process you go through. Where is the end? Where's the end zone? Where is the end zone? Well, the end zone, from what I'm seeing in this picture, here's the zone. And this zone is actually fresh, because this candle spiked up and hit the 50 simple. It never came into this drop, base, drop. So it's the full length of the drop, base, drop here. And now we're starting to pull back. Okay, pulls back, retests, and then the move down. But in order to properly take this trade with the most protection, and that's how you got to play this, where is the most protection that I can get with my stop loss? And from what I'm seeing, it's right in here. This may come up, ding this line, and then take off to the downside. Right? Yeah, you might miss the trade. But that is, unfortunately, that's what you have to deal with. So I would rather deal with the stress of wondering, is it going to pull back into this zone, than, I just made a bunch of money and I got stopped out. There's plenty of trades, right? There's plenty of trades to find. Don't worry about that. Line stuff up. Make sure everything is perfect, right? See how this pullback is taking place in a downtrend, high time frame, transitioning down, cycling down, momentum is down on both time frames. Middle time frame, red candles. Middle time frame, momentum is down. High time frame, yellow candles transitioning to the downside. Cycling down, momentum down, all on the high time frame. The pullback, you're pulling back into a lot of downward force. That's what TrendCloud lines up for you. And that's what you've got to look for. All right. So, all right, my voice is getting kind of sore. Doing a lot of talking. So great job, guys. So that was a good lesson in entry, taking targets. We also looked at how to take an entry using those confirmation entry candles, right? No matter what color they are, if they're red or green, take the trade in the direction of the trend. So in this case, comes back around. If it breaks through that confirmation entry candle, we are going to take that trade, right? To the downside. And we did, right? We made some money, and now it's pulling back. And the second strategy that we're looking to do is the retest of the opening range. So this is the second strategy that we're going to employ. And our entry point is going to be right at that 886. And we are protected by all of this structure here. That's the strategy. So that is the second entry. Let's see if it works out. It may not pull back that far, but we employed our TrendCloud and our strategy, and we made some money, and that's what you do every day. Okay, and if it's not there, then you don't take the trade. But when TrendCloud is on your chart and everything is lined up, those are the signals that you take. All right, so good job, everyone. I am going to drink some more tea and rest my voice, and I will see you guys tomorrow. Thanks, everyone. Take care.